The US dollar. It's more than just currency. It's a powerful force that shapes our lives. From the gas we pump to the clothes we wear, the dollar's value has a ripple effect. Understanding its fluctuations is crucial for making informed financial decisions. Whether it's planning a vacation, investing in the stock market, or simply budgeting for groceries, the dollar's strength or weakness plays a significant role. A strong dollar means our money goes further. We can buy more goods and services, both domestically and internationally. On the other hand, a weak dollar can lead to higher prices and a decrease in our purchasing power. The fluctuations of the dollar are a constant reminder of the interconnectedness of the global economy. A strong US dollar brings good news for consumers who love a bargain. When the dollar is strong, imported goods become cheaper. Think electronics, clothing, and even cars. This is because we can buy more foreign currency with our strong dollars, making those products more affordable. For example, imagine a Japanese car manufacturer selling a car for 1 million yen. If the exchange rate is 1 USD to 100 yen, the car would cost $10,000 in the United States. But if the dollar strengthens to 1 USD to 110 yen, that same car would now cost only $9,090. This price difference can make a big difference for consumers looking to save money. A strong dollar can also help keep inflation in check. When the cost of imported goods is lower, businesses are less likely to raise prices on their products. This benefits consumers by keeping everyday essentials more affordable. For those bitten by the travel bug, a strong US dollar is a passport to savings. Traveling abroad becomes more affordable as our dollars stretch further in foreign countries. Whether it's booking flights, hotels, or indulging in local cuisine, a strong dollar can make a significant difference in our travel budget. Let's say you're planning a trip to Europe. With a strong dollar, you'll get more euros for every dollar you exchange. This means you can enjoy more experiences, from museum visits to delicious meals, without breaking the bank. That dream European vacation suddenly feels much more attainable. A strong dollar also benefits those who enjoy shopping for foreign goods. Whether it's luxury fashion or unique souvenirs, a strong dollar makes these purchases more affordable. The thrill of finding a great deal while traveling is amplified when our currency is strong. A strong US dollar isn't just good for consumers, it also attracts foreign investors. When the dollar is strong, it's seen as a safe and stable investment. Foreign investors are more likely to park their money in US assets, such as stocks, bonds, and real estate. This influx of foreign investment is beneficial for the US economy. It can lead to job creation, business expansion, and overall economic growth. A strong dollar signals to the world that the US is a reliable and prosperous place to do business. Moreover, a strong dollar can make it cheaper for US companies to acquire foreign companies or assets. This can be advantageous for companies looking to expand globally. The strength of the dollar can be a powerful tool in international business negotiations. The downside of a strong dollar: exports suffer. While a strong US dollar brings many advantages, it's not all sunshine and roses. One of the significant drawbacks is the impact on American exports. When the dollar is strong, American goods become more expensive for buyers in other countries. Imagine an American company selling wheat to Japan. A strong dollar means the Japanese buyer will have to pay more yen for the same amount of wheat. This makes American wheat less competitive compared to wheat from other countries with weaker currencies. This can hurt American businesses that rely on exports. Reduced demand for American products can lead to job losses, factory closures, and a decline in economic activity. A strong dollar can create a challenging environment for American businesses operating in the global marketplace. The downside of a strong dollar: American competitiveness. A strong US dollar can also make it harder for American companies to compete with foreign rivals, both domestically and internationally. When foreign goods are cheaper due to a strong dollar, American companies may struggle to keep up. For instance, if a Chinese company can sell smartphones at a lower price than an American company due to currency fluctuations, American consumers may be more inclined to choose the cheaper option. This can lead to a decline in market share for American businesses. This price disadvantage can force American companies to cut costs, which can lead to lower wages or even job losses. A strong dollar can create a ripple effect that impacts the entire American economy. Maintaining a balance in the value of the dollar is crucial for ensuring a healthy and competitive business environment. a weak dollar boosting American exports. Now let's flip the coin and examine the advantages of a weak US dollar. One of the most significant benefits is the boost it gives to American exports. When the dollar is weak, American goods become more affordable for buyers in other countries. This is because foreign buyers can get more dollars for their currency when the dollar is weak. This makes American products more attractive and can lead to an increase in demand. For American businesses that export their goods, a weak dollar can be a boon. Increased demand for American products can lead to job creation, factory expansion, and overall economic growth. A weak dollar can be a valuable tool for stimulating the American economy, especially during times of slow growth. A weak dollar. The tourism advantage. A weak US dollar isn't just good for exporters, it can also be a boon for the American tourism industry. When the dollar is weak, it becomes cheaper for foreign tourists to visit the United States. This is because foreign visitors get more dollars for their currency, making everything from hotels and meals to attractions and souvenirs more affordable. This can lead to an increase in tourism, which benefits hotels, restaurants, airlines, and many other businesses. Increased tourism can create jobs, generate revenue, and boost the economies of popular tourist destinations. A weak dollar can be a welcome mat for visitors from around the world, showcasing the best of what the United States has to offer. A weak dollar. Inflationary pressures. However, a weak US dollar also has its downsides. One of the most significant drawbacks is the potential for inflationary pressures. When the dollar is weak, imported goods become more expensive. This is because American importers need to pay more dollars to buy the same amount of foreign goods. This increase in import costs can lead to higher prices for consumers on a wide range of products. From everyday essentials like food and clothing to electronics and cars, a weak dollar can make it more expensive to maintain our standard of living. This can be particularly challenging for people on fixed incomes or those with limited budgets. A weak dollar can erode purchasing power and make it more difficult to make ends meet. Balancing the benefits of a weak dollar for exports and tourism with the potential consequences for inflation is a delicate act. Factors influencing the dollar's strength. The value of the US dollar is constantly fluctuating, influenced by a complex interplay of factors. Understanding these factors can help us make sense of the dollar's movements and their potential impact on our lives. One of the most significant factors is interest rates. When interest rates in the United States are higher than in other countries, it attracts foreign investment, increasing demand for the dollar and causing it to strengthen. Conversely, lower interest rates can lead to a weaker dollar. Economic growth is another crucial factor. A strong and growing U.S. economy tends to attract investment and strengthen the dollar. On the other hand, economic uncertainty or weakness can lead to a decline in the dollar's value. Government policies, global events, and even market sentiment can also play a role in influencing the dollar's strength. The interplay of these factors creates a dynamic and ever-changing landscape for the U.S. dollar. Staying informed in a fluctuating world. The value of the US dollar is in constant flux. It's a reminder that we live in a globalized world where economic forces are interconnected. Staying informed about the dollar's movements and their potential impact on our lives is crucial. Whether we're planning a vacation, investing our savings, or simply budgeting for groceries, understanding the dynamics of the dollar can help us make more informed decisions. By staying informed, we can navigate the ups and downs of the global economy with greater confidence. From cheaper imports and travel bargains to the potential for inflationary pressures, the dollar's fluctuations touch our lives in countless ways. By understanding the forces at play, we can make the most of a strong dollar and weather the storms of a weak one. The US dollar is more than just currency, it's a reflection of our interconnected world. If you found this video helpful, please like and subscribe to Express Econ Geofinance Insights. And don't forget to leave a comment below. We'd love to hear your thoughts.